Investing can be a pathway to building wealth, but it requires knowledge and strategy. Here are some key insights for navigating the world of investment. Diversification reduces risk. Spreading investments across different asset classes like stocks, bonds, and real estate lowers risk. Compound interest allows investments to grow exponentially over time through earning returns on both the initial investment and the accumulated interest. Staying in the market long term has proven more profitable than trying to time the market. The stock market can be highly volatile due to various factors such as economic indicators, company performance, and geopolitical events. Bonds are considered safer investments compared to stocks, providing regular interest payments and returning the principal amount at maturity. Real estate investment offers rental income and potential property value appreciation, acting as a hedge against inflation. Mutual funds and ETFs pool money from multiple investors to create a diversified portfolio managed by professionals, easing the investment process. Risk and return are directly correlated. Higher risk investments can yield higher returns, while lower risk investments offer lower returns. Dollar cost averaging involves regularly investing a fixed amount into a particular investment to lower the average cost per share, reducing the impact of market volatility. Inflation can erode the purchasing power of investment returns, making it crucial to seek investments that can outpace inflation. Tax-advantaged accounts like IRAs and 401ks provide tax benefits for retirement savings. Emerging markets offer high growth potential but come with higher risks such as political instability and currency fluctuations. Impact investing aims to generate social or environmental benefits alongside financial returns. Cryptocurrencies, a new and highly volatile asset class, offer potential high returns but come with significant risks and regulatory uncertainty. Behavioral finance studies show that emotions and cognitive biases can impact investment decisions, emphasizing the need for rational and disciplined choices.